Are you working harder than necessary to have a sufficient savings for your retirement? Hello and welcome to this week's Share Market Report. I'm Dale Gillham, the Chief Analyst here at Wealth Within. This week I'll be discussing retirement, the Dow Jones Index, the S&P 500 and the market in general, along with a couple of stocks. I find on a daily basis that most people who ask for information about building their wealth in the stock market are worried about whether they'll have enough money to retire with. But many have no idea how much they'll need. Research released only 2 years ago said that most retirees don't have enough for a comfortable retirement, and that we all need at least $1 million to retire. Whether retirees need $1 million or not is debatable, and there are a lot of variables in how much any individual or couple will need that are personal to them. That said, ask most people and they will tell you that they desire to be millionaires, but only a few make it. Now, if retirees don't have enough money according to research, then why do half of all retirees spend less than the age pension? And if they are spending less than the age pension, how stressed are they because they are spending less? Well, this leads us to even more research. And recently, I looked back at some research conducted by the Melbourne Institute, which indicated that for Australians aged over 70, only 13% experienced financial stress. And only 10 years prior, the data indicated that 10% in this age group experienced financial stress, meaning there has been a small increase over the past decade. So do we really need as much money to retire on as the research indicates? Data indicates that a couple in retirement need around $60,000 per annum to live a comfortable retirement. But as we would expect, spending in retirement dramatically declines after we turn 80. Now, we also need to factor in our thinking that the average life expectancy for males is around 80 and for females it's around 84. To get a clear picture about what you need to accumulate for your retirement, perhaps you could start doing some research into what sort of things in your spending habits that you might need to include or exclude when you're in retirement. Maybe you could ask some retirees what you might need to fund. In the end, funding your own retirement is your responsibility. If you do or do not have enough in your retirement, it comes as a direct result of what you did or did not do earlier in life. As they say, if it is to be, then it's up to me. So do Australians need to work harder to accumulate more wealth, or do they need to work smarter? Now, I think the answer is both. The first step, though, is to determine what the goal is, and here we go back to that magical number from research in that retirees need $1 million to fund their retirement. Now, whilst we can argue this figure, what we can do is know that every person needs to determine their own magical number. When estimating the amount of wealth that you need to create, remember to add 2 or 3% to cover inflation, and you need to add this for every year from now until you expect to retire. Also, review your current expenses and reduce the items you won't need once you've retired and add the ones that you do need. Now, a great place to visit that will assist you is the government website that's called Money Smart, as this website provides calculators that can assist you to determine what you will have in retirement. So start doing your research today so you can have what you need in retirement. So let's get into the charts. Okay, let's look at the chart of the Dow Jones Index. Right now you can see on screen it's actually a monthly chart, but what I want to do is just change it over to a weekly chart so we can see it a little bit more clearly. Obviously, there's more detail on a weekly chart and there's even more detail on a daily chart, but sometimes more detail is not really good for you. So I'd always suggest do most of your analysis on the monthly chart and then bring that down onto a weekly chart. All too often I find traders making huge mistakes by getting into those daily charts and especially getting onto the market intraday. That's quite a common conversation I have with people looking to educate themselves and they're talking to me and they're telling me that they're traders and have been trading for 1, 2, 3, 4, 5 years, and I ask how they're trading, and invariably they're looking at daily charts and they're looking at the market intraday, and they're not trading a way that is conducive to them, and they're also not highly educated in what they're actually doing, so they don't really understand what they're doing. So for professionals, and this is what I do all the time, is monthly, weekly charts. It's rare for me to get onto a daily chart, and that might be surprising to some of you, but it really does tell you what to do. And it's probably the analogy I can use is it's sort of like a train. The momentum of the market is like a train, and it sort of goes from the A to point D. It's got to go through stations B, C, and so it might slow down during those times. It may stop at B or C, but it's going to get to D anyway, regardless. And looking at daily charts tend to be like looking at like level crossings or stones on the track. They're not really going to stop the train getting from point but D, and that's really what I'm talking about. Is the longer term momentum of where it's going to is what you need to be looking at, and you're going to see that on the monthly, and not so much on the weekly chart, but much more on the monthly chart. But looking at the Dow, as you can see here, last week we closed at 25,355. Really nice strong week. Opened a little bit lower than it closed the week before. Strong week up, closed on its high. Really nice sign for the Dow to start to move up again. Currently, I'm recording this on the 13th, of March, and you can see currently this week it just opened up a little bit higher than it closed last week and has traded down a little bit, but that's nothing to be worried about at the moment. I think if it does stay higher and it closes higher than last week, especially if it closes higher than the week ending March the 2nd at that high there of 25,800. If it gets through that this week, then it would suggest it will get through that 26,616. It'll get through that over the next few weeks. If it does break that high there of that bar of the 2nd of March. I'm just going to have a look at a couple of stocks in the food area. So I'm going to look at McDonald's. So on your screen now you can see a monthly chart on the left and a weekly chart on the right. And I thought I'd get into this sort of fast foodie type of thing. I'm going to look at another one that's Yum Foods in a minute, which is KFC, and a few other different brands that it has under that label. But looking at McDonald's, you can see this stock has just powered through over the past few years. And if I look back at the history of McDonald's, you can see here that since sort of that low in 2000 and March 2003, it's done really, really well. Obviously 2012 to 2016, 15, 16 there, during that aftermath after the GFC, it sort of went a little bit sideways a little bit, but that's nothing too much to be worried about. Stocks they accelerate away from what's normal, or that momentum that I was just talking about. Then they spend some periods of time in what's called a secondary reaction, which is sometimes is what they are very sideways moves, sometimes they're slightly downward moves. At this point in time, I don't think there's anything too much to worry about McDonald's if you do own it. Looking at this monthly chart, we're seeing the current month is opening and closing at the same point, but we're only not quite halfway through the month. On that, but right now it is looking good. Would I be getting into McDonald's right this second? No, I'd just be waiting to see what's going to be happening over the next few weeks to see if it does start to move up again. If it does, then it might be a nice little trade, because you would think it would go through that 178.70 high from there. Now let's look at the other stock that I was talking about called Yum Brands, and as I said, it does have KFC and it has a few other different brands or takeaway fast food brands in there. A little bit more volatile, this stock, and you can see that on that weekly chart, and you can see that over here on the monthly chart as well. Currently, let's bring up the monthly chart here. You can see how this is a lot more volatile than McDonald's, but it's still looking quite bullish. And I'll go back through here, and you can see it has been rising up since 2002, 2003. Currently, it's looking like it'll move through its previous high there at 86.93. I think it's going to continue to be bullish. If I draw a trend line underneath this, just a nice trend line on a monthly chart, you can just stick that out underneath your charts if you're looking in your broker's websites. As long as it's staying above that green line that I've got drawn there, you might like to duplicate that yourself. As long as it's staying above that, then I think you would stay in this stock for this period of time of this run, because it will keep going. What I'm looking at, as I said, it does look like it will keep going a lot higher. I haven't done enough work on it to tell you where it's going to hit, but right now it does look bullish. So I'll leave that with you, and have a look at these other stocks in that fast food area, because you might see some other really nice opportunities. I'll talk to you next week. What are your thoughts? If you've got any questions, comment below. Go to listen to our Talking Wealth podcast, available on Soundcloud and on our website. They're jam-packed with valuable information which will help you elevate your trading. Now, if you're serious about learning to trade the share market and you'd like more information about our courses, click the first link in the video description below. Thanks very much for watching this video. If you enjoy our content, subscribe to be notified when we upload new videos. I'm Dale Gillham, the Chief Analyst at Wealth Within. Goodbye, good luck and good trading.